Good day, let's welcome Miss Taylor to share with us on data and record keeping. Miss Taylor, our students are new to this area. How about you sharing with us your expert knowledge?
Today's financial services firms use a vast amount of information to operate on a day-to-day basis. This information is the lifeblood of financial firms, and it is important that this information or data and the systems that manage it are protected from issues.
So, what are the data and information that are important?
Records of financial promotion, customers, and instructions received from customers, and execution of transactions must be kept. These data have to safeguard it and help to also protect employees, customers, suppliers, and other relevant stakeholders.
Records of financial promotion. What are some of the data that are kept for these promotions?
Published copy of the financial promotion, the date of confirmation and, where appropriate, approval, evidence of any supporting factual information. These are the data to be kept.
How about customers' data?
Data includes name, address, and details of the Know Your Customer fact find and copy of the most recent terms of business or customer agreement.
Does one have to keep records of instructions from customer?
Yes, of course. Records to be kept on these instructions include the customer's name, account number or other identifier, and of course, the date and time that the order was received by the firm or the decision was made to deal, and the investment, the size, and whether it is a purchase or sale.
How about transactions data?
The investment concerned and the size, the price, and any other significant term, whether it was a purchase or sale, and of course, and the time of execution have to be kept.
What data the firm has to keep when it executes the transaction?
A firm which effected a sale or a purchase of an investment, other than a life policy, with, or for, a customer has to dispatch a written confirmation recording the essential details of the transaction. The confirmation must include the details such as the firm's name and address, customer's name or other designation and account number, description of the investment, including the amount invested and the date of the transaction.
Are these the general requirements?
You are right. This is the general requirements for confirmation. In some cases, when a firm executes a series of transactions to achieve one investment decision or objective, or to meet orders that it has aggregated, it may calculate a weighted average price and dispatch a single confirmation after the last transaction. This must state that the price shown is an average one.
Is there any difference with the contents for confirmation of derivatives?
A confirmation for a derivative will contain the information stated earlier under general requirements, plus additional items such as the maturity, delivery, or expiry date of the derivative. In the case of an option, a reference to the last exercise date, if it can be exercised before maturity, and the strike price.
Option? How about the data when one exercised the option?
A confirmation for the exercise of an option will contain the information listed under general requirements, plus the date of exercise, and either the time of exercise or that the customer will be notified of that time on request, whether the exercise creates a sale or a purchase. The strike or exercise price of the option and, if applicable, the total consideration from, or to, the customer.
So that is the data for products, customers, instructions, transactions, and confirmation. You mentioned about stakeholders earlier. Who are the stakeholders?
Some example of the stakeholders are trading partners or other market participants.
You mentioned that the data help to protect the involved parties. Is there any regulatory body involved too?
Yes. A firm must take reasonable steps to ensure that sufficient information is recorded about its regulated business and compliance with the regulatory system. Records may be kept in any form, provided they are accessible for inspection by the Financial Regulatory Authority. In Singapore, our regulatory authority is Monetary Authority of Singapore. MAS in short.
Oh, I see. So the records may be kept in any form. How long one has to keep these records?
In general, records must be retained for 3 years. However, records in relation to pension and life assurance products and advice have to be kept for longer.
I have clients who requested to view these records. What is your advice?
Clients have the right to inspect some records. These include written materials and records relating to that client and which the firm has already sent, or is required to send, to that client under the conduct of business rules. Of course, also copies of any correspondence received from that client relating to regulated business.
I have clients who requested to view their spouse records. Is it possible?
I am afraid not. Bank secrecy is of utmost importance.
Miss Taylor, thank you for the sharing on types of data and information. Now, how about the periodic valuation reports? You see, our customers may request for periodic valuation statements and reports. How about telling us more on this area?
Periodic statements are usually generated and sent not less than 6 monthly intervals, unless the customer has notified the firm that he wishes to receive them less often. These reports are required especially in situations where the firm acts as the investment manager for a customer or operates a customer's account containing uncovered open positions in a contingent liability transaction.
For non-residents, possible for them to request not to receive any report?
Yes, of course.
What is the typical information in a periodic report?
For a discretionary managed portfolio, the statement includes a list of the securities held and their value, details of any cash held, the basis of valuation, the particulars of transactions undertaken during the period, particulars of changes in valuation or composition, charges to the account over the period, and a summary of the remuneration received by the firm from third parties, particulars of securities pledged by the firm as collateral or charged by the firm to secure borrowings on behalf of the portfolio.
How about the periodic valuation report of a contingent liability investment?
This report includes a list of all positions held and their value, details of any cash held, the basis of valuation, the aggregate of all money transferred in and out of the account during the relevant period, details of all closing transactions in the period and the profit or loss made, details of the unrealized profit or loss on open positions at the valuation date. The periodic statement for contingent liability investments may also be called an account valuation statement.
Wow, that's lots of information. Thank you for spending time to explain all this. We will see you again.
You are welcome. Goodbye.